everyone, welcome. You're watching Business Today TV. This is Market Today. I'm Sakshi Batra and with me is Shailendra Bhatnagar, editor for markets on Business Today TV. Well, an eventful week ahead. We have the markets which will be reacting to a host of earnings, also react to and from Reliance Industries to top banks, and all eyes will also be on the US Fed's rate decision this week. Now, will the Nifty resume its uptrend after Friday's sharp drop is something that we will discuss. But first up, the top headlines this morning. Markets near record highs enter the last week of July's magnificent expiry in a consolidating mode. Nifty will respond to tepid earnings by heavyweight Reliance Industries on the one side to stunning results from ICICI Bank and Kotak Mahindra Bank on the other. Traders will also brace for a very high possibility of a 25 basis points rate hike from the US Federal Reserve in the middle of the week as the world's largest central bank calibrated borrowing costs to cool down a booming economy. Very good morning, Shell, and also a belated happy birthday to you. How was your birthday weekend? I'm sure that you are geared up for a strong setup in the markets. You are dressed up in green, and I hope the markets really take that cue from you. We have sustained the rally on the markets for 4 straight weeks, despite that very, very sharp downtick that we saw on Friday, and hope the momentum continues.
Good morning, Sakshi. Thank you for the wishes. And yes, on purpose, I'm wearing a green shirt and a dark green tie for the market to take a hint and a cue on where it should head. God resides in data, and in data is all that we believe. We'll go through all the data points and then get into a conclusion where the Nifty is headed. But the fact remains, we've seen a fantastic July so far. The Nifty is up about 5.7% on a monthly basis, and the fact that we've seen a very strong gain coming on all the front lines. You know, if you take out tech for a while, if you remove last week's tech performance, it's been a fantastic rally. Now, the bill for the party comes, and we've seen a pretty sharp sell-off that happened on Friday. We lost about 250 points on the Nifty from its peak. So that's where the picture stands. But let us analyze it in a bit of detail. Remember, we are in the last week of July's fantastic expiry. We have 4 sessions left, and this week is going to be a very heavy earnings week. So in the past lies a peek into the future. Nifty failed to top out beyond 20,000 points, the psychological level, and that is now plying heavy on the index. As you know, we discussed Reliance's earnings. Yes. It's the heaviest weight, the second heaviest weighted stock on the index post Friday close, and those earnings disappointed the GDR, which closed about 6.5% down. I would presume you'll see a similar downtick on Reliance over a period of time, simply because prices overseas and on local markets have to match. Just as you saw a downtick on Infosys when its ADR closed 8% lower, something similar is likely to happen to Reliance, but over a point of time. So that's a bit of negativity on the index as far as Nifty is concerned. So Infosys and Reliance continue to be weak. They are the second and the third highest weighted stocks. Infosys, as you would know, the delivery statistics for Friday was phenomenal. So people have sold. Whether they've booked profit or not is something to consider later, but there's a bit of a weakness. So Reliance and Infosys are weak. But what's really making up for the Nifty are 2 stunning earnings by Kotak Mahindra Bank and ICICI Bank. Remember, ICICI is already at a record high. We'll give you the numbers a little later, but just think in terms of what the positioning is. About a 40% rise in ICICI Bank's quarterly first quarter net profit. Phenomenal numbers. No matter where you look at it, you can't find fault. Similarly on Kotak, very strong numbers. and that's sort of driving what the Nifty is doing. So my understanding is that Nifty will consolidate sideways to weak. The 10-day EMA is at about 19,640. That's the buy zone, and let's see what happens. But Bank Nifty is likely to outperform the Nifty, although both of them have done fairly fantastically, 5.7, 5.6% up so far in July, and that's heartening. Sakshi.
Absolutely, Shell, and this is what I was coming to. I remember on Friday and on Thursday as well, you were constantly talking about how Nifty Bank is something that you would prefer to focus more on rather than the Nifty now. And now
Yes.
with the stunning numbers coming in from ICICI Bank, Kotak Bank, like you talked about, I wanted to understand for this week also, will the Nifty Bank do the heavy lifting for the bulls?
I would imagine so, Sakshi, because you see the tailwind on the Bank Nifty is very high. Look at the PSU banking basket. Stocks are at multi-year highs like Bank of Baroda, Canara Bank, Union Bank, Indian Bank. All of them are, firing all cylinders. Within the private banking space, you have ICICI, Axis at record highs. You have a very, very strong traction in Kotak Mahindra Bank. Then of course HDFC Bank is now pulling in all it's supposed to do, and remember HDFC Bank is the highest weighted counter in the Bank Nifty. Apart from that, we have earnings due from State Bank of India, and we have a very, very strong traction building into what was the earlier high beta counters, RBL Bank, Bandhan Bank. They don't have much earnings to talk about, but remember they set the sentiment on the long side. So all of them are firing, and I would presume that the fantastic rally that we saw in Nifty is most likely to go into Bank Nifty. Nifty will consolidate. It's okay to give 300, 400 points back to the market when you've already seen a fantastic rally of about 1,300 points. It's all give and take in the markets, actually. You take a lot and you give back some, so that you can again rise all the way back in. Apart from that, the most important global event of the week, which is the US Federal Reserve's point of raising rates, will happen on Wednesday. Most likely you have a 25 basis points rate hike already baked into the price at Wall Street. So that's going to happen. My understanding is that the lead will be taken by Bank Nifty, and Nifty will consolidate.
Sure. Also, the series expiry now, and in the F&O space, the action should escalate. What are you watching out here?
So, Sakshi, I've been saying it for the last 2 odd weeks, and I have no shame in again repeating myself. We have a crisis of plenty. Banks. PSU banks, private sector banks. These are the ones that I am looking at. And because of the rate hike, I would imagine the bearish sectors would be again FMCG and metals globally, as also IT. IT is sort of how should I say, back to the drawing board, to put it very simply, and that's what is happening. This is also a very, very strong earnings week, Sakshi. We are going to see today Canara Bank from the PSU banking basket. As also a very strong earnings is likely to come in from PNB Housing, and of course Tata Steel. We'll give you details on Tata Steel in a bit. And Tuesday, Wednesday, it's a packed earnings calendar. So the stocks that I'm looking at in the F&O are the ones that are on record highs. 3 of them, let me mention: SBI, Ashok Leyland, ICICI Bank, and United Spirits. These are doing fantastically well on the charts. The open interest statistics, the way they are poised technically, all based on data, are doing pretty well. And on the bearish side, of course, IT.
Okay. Let's also look at the global cues and the handover we've got from the US markets, European markets, the Asian markets. How are they looking? So let's start off with the US markets first. They ended mixed on Friday, with the Dow Jones extending the rally for the 10th straight session. It is the longest winning streak for Dow Jones in the last 6 months. Of course, we did see the Nasdaq up by 0.2 odd percent, the S&P 500 by 0.03 odd 2% as well. Now, the Asian and the Pacific markets were also mixed this morning. We did see, of course, a slew of economic data from the region, including inflation numbers from Malaysia and Singapore, will also be in focus. In Japanese market is the one that is taking the lead today with the percent gains on the Nikkei at the start of the week. Topics also up by about 0.5%. So that's as far as the Asian markets is concerned. The Gift Nifty is indicating a muted start as of now as well. And just like how Shell pointed out, all eyes will also be on the US Fed and the rate hike announcement, and how will that impact the global market cues as well. On the FII's basket, now one has to really look here. Foreign institutional investors sold shares about 1,998 crore rupees, whereas domestic institutional investors bought about 1,290 odd crore rupees. Now, this is a first sign of sell-off coming in after a long time. Shell, should one put any thought to this after many sessions FPIs selling off in the Indian markets, or is this just mild profit booking?
Sakshi, you said it. It's just mild profit booking. I would not be worried even a bit if our foreign funds take out 2,000 crores from the market. Trust me, it's a good sign that people are booking profit at record levels. And everybody has a right to be happy. And booking profit is an essential part of how markets function. You put the money in the bank and then prices correct. It allows newer people to come in. So you are happy because you have money in the bank, and the people who are coming in are happy because they get relatively lower prices. Just be completely, how should I say, not exactly ignorant, but just be happy that people have booked profit. Remember, past 8 trading sessions they have bought. So if they've sold marginally, it's fine. And the balances that are local domestic institutions have bought a bit of that, 2,000 crores that our friends have sold with as far as the foreign tag is concerned. Overall, July, it's beautiful. 19,000 crores have come in from on a net basis into domestic equities by our foreign friends. So nothing at all to be worried about. In fact, India has been a beacon of safety, an island of relatively growth if you look at it globally, and that's playing out absolutely by the book when it comes to prices, when it comes to quality, and when it comes to earnings. Sakshi.
Absolutely. Let's also look at all the stocks that you should definitely keep on your radar and that the markets will be reacting to. Of course, Reliance Industries to start off with. Friday evening, we got the numbers right there. It reported 11% year-on-year drop on the net profit front. The consolidated revenues declined by 5.3% year-on-year to 2.1 lakh crore rupees. There was a strong contribution, however, from the consumer and the upstream businesses, which offset the decline in the O2C business right there. Reliance Retail reported its highest ever revenue, EBITDA and margin, and that's something to cheer about. Geo Platforms ARPU also stood at 180.5. So we will wait for the reaction based on the GDR reaction. Of course, that will be something to watch out for when the markets open. ICICI Bank, strong Q1 deposit growth, best in the 9 quarters as well. The asset quality has improved on the gross NPA basis, that declined to 2.75% from 3.4% a year ago period, and the net NPAs also fell to 0.48% from 0.70% a year ago as well. The share was up about 0.5 odd percent at 1,000 rupees, so there should be an added on reaction on that. Kotak Mahindra Bank, deposit growth of 22% year on year, the best in the last 16 odd quarters. The NIMs at 5.57%, declining sequentially, but remaining the highest among the large banks. So that is something that will definitely something the stock will react to. NIIs came in line, but the net profit was ahead of street estimates at large for Kotak Mahindra Bank. You saw the stock at 0.6% higher at 1970. Odd rupees last Friday. Now, EU Small Finance Bank, another bank that will has reported its earnings. Profits grew 44% on a year-on-year basis. The net interest income rose about 28% on a year-on-year basis to 1246 crore rupees. NIMs, however, declined to about 5.7%. Keep an eye, half odd percent of declines on Friday. 767 rupees was the stock at. Paytm, of course, the earnings coming about, the consolidated net loss narrowed to 357 crores from the previous year's quarter. Sequentially, it has widened, however. Also, on the EBITDA front, we did see 359 crore rupees coming in from an EBITDA loss last year. And also up about 50% sequentially. So that should be something that the stock should react. It was down 1% on Friday at 842 odd levels. Yes Bank, of course, weak loan growth, weakest NII growth in the last 9 quarters. Slippages ratio, the highest in 7 quarters. So the weakness in the fundamentals and the earnings continues. However, the stock was up about 2% on Friday at 18.05. Vedanta, last stock that I'm talking about in the stocks to watch list, the net profit for the June quarter came in at 2640 crores on lower realizations. There's a slip of 40% right there. The drop in the net profit has also come in despite the exceptional gain. The company's net debt has also increased, so that's something that one should be watching out for. Shel?
Sakshi, so mostly if you go through what you've said, logically you'll find good news in the market. So one or two
Net.
earnings don't make a summer, and that's what's happening. And of course, if you see Paytm, they've gone up dramatically. A bit of a profit booking there would encourage new hands to come in and old guys to book profit. So nothing changes out of as far as sentiment is concerned. People are, of course, worried about the sharp correction that we saw on Friday. But remember, it's a bull market, and the job of the bull market is to ensure that you part with your shares, which you shouldn't, at least the quality ones. And it is these volatile movements that prompt weaker hands to exit. Please remain strong. The underlying trajectory of the market and the sentiment remains buy on dip. The most sensible point is the 10 EMA on the Nifty, which is 19,640. We shut shop at 19,750 on Friday. So, and the gift Nifty is showing signs of a weak opening. Please welcome this with both hands. When the right point, the right trigger comes, we'll certainly inform you what to do. But for this week, the week that is the final round of monthly expiry for the Nifty and the Bank Nifty, is likely to be consolidating to sideways to flat for the Nifty. And because Sakshi has given out such wonderful earnings for Kotak, ICICI Bank, and so many other banks, you would see a very nice trajectory towards the higher side. At least that's what people are saying so far. SBI is in the pipeline, Canara Bank is in the pipeline. So these earnings will also enthuse the Lal Street, Sakshi.
Absolutely, Shel. Now let's welcome our external expert on the show. Mr. Devin Choksi joins in. He's the MD at KR Choksi. Welcome and good morning, Mr. Choksi, and thank you for taking the time out for this discussion on Business Today TV. Shel Bhatnagar also with me right here. The first question definitely on RIL, your favorite topic, and that is on what is your own first take on the earnings. We've seen a sharp reaction downwards on the GDR front, but overall, versus your estimates, how were the earnings this time?
Hi, good morning, and thanks for having me on the show. After long, I'm chatting with Shell. Well, I think RIL earning hasn't disappointed, actually speaking, from the consumer segment point of view. If you are looking at the retail segment, has contributed significantly to the earnings, and that is what was expected. I think two things were expected: that given the kind of new brands that the retail has been acquiring over the last few years, and I think the new store with the omni-channel presence that they have created through the web stores. I always communicated to my investors that this is one success story that this company is writing. That on one side they are building their own brand portfolio, on the other side they have creating their own distribution network, either a physical store or a virtual stores. And put together, this has actually started. This will probably provide higher amount of margin in the retail business, which is not seen in anywhere in the world. 7.5% kind of a EBITDA margin is not found with many retailers across the globe. I think that is where probably this company stands tall. So yes, I think not very surprising though, but I think it's a very impressive number on the retail side, which provides the visibility of the company entering into the yearly run rate of around 3 lakh 20,000, 25,000 crores in the current financial year. So that remains reassuring. Second
Hmm.
part is Geo platforms, which is digital services. Once again, I think without factoring account Geo Bharat, the new fund that they've launched, which has a potential of around 25,000 crore worth of revenue and 12,500 crore worth of EBITDA contribution into the books. We don't take that into account, but even the core business of Geo platforms is resulting into the 20% kind of a growth into the business and also I think the profits particularly. So they are also on a yearly run rate of around 50,000 crore. Should Geo Bharat gets added to it, I think it would be around 60,000, 65,000 crore worth of EBITDA run rate in the current financial year. So these two consumer facing business remains distinctly positive. In the O2C segment of business, certainly the oil and gas contribution, production contribution, exploration contribution has come in very smartly. The two areas probably which did not perform well, and that is due to the commodity nature of the business, that is the refining business and petchem and polymer business. In refining business, probably due to the sharp drop in the GRMs in the Singapore, probably I think this has affected the company to a greater extent. And while comparing with the year over year, I think last year the base was quite high because of the lower crude oil prices. This year that is not the situation. And the polymer
Right, Devin bhai.
petrochemical businesses also has had a relative amount of challenge because of the global environment in which currently the economies are operating. But according to me, that is been already factored into the last quarter. Current quarter onwards, I think these two businesses are likely to remain more steady and providing the real growth which is basically missing in the earlier quarter.
Hmm.
Right. Devin bhai, it's such a pleasure to host you and
Getting
welcome
the
to
audio of
BTTV. We've known each other for the past 25 years and it's always been
sorry, Shail.
an educative exercise to listen to your views, especially on Reliance Industries. Can you hear me clearly, Devin bhai?
Yeah, Shail, now I can hear you. I think I missed your audio in between.
Okay. Again, a very warm welcome to you. Let's get back to the broader markets. I was just trying to understand how do you watch sentiment now? What are the two or three underlying, foundational stones of your investment thesis so far? And how are you guiding your own HNI clients when it comes to the way forward for H2 in Indian markets?
So, Shail, it's always a pleasure talking to you. Well, I think the current environment in which we are, I think at least in my more than 3.5 decades of involvement into the capital market, I haven't seen this kind of fantabulous environment, I think, as I would like to name it as, in all this career. On one side, the government is collecting significantly high amount of revenue by way of taxes, which means their balance sheet is remaining absolutely healthy. At the same time, I think they are not spending high on the freebie schemes, and as a result of which, I think the once again the deficit-related controls are very well exercised by the government, which is called, I think, a most disciplined balance sheet ever I have seen of Indian government. On the other side, the corporate sectors, which were up till now struggling with the balance sheet issues, largely because of the higher debt, even for that matter, banks carrying the non-performing assets into the books. They are all now matter of past under whatever the initiative the government has taken, the balance sheets are clean. And the most important part is the individuals are receiving a lot of money in their hands because the government is spending big time in building the infrastructure. Currently, we are talking about 110 lakh crore spending on infrastructure, out of which I think first 3 years of spending is around 20 lakh crore, including the current financial year. So that means that I think the amount of money going in the hands of individuals for spending, discretionary spending, is on a rise. And given that situation, we are seeing across the board the amount of money getting into the hands of individuals and discretionary spending rising, be it FMCG company, be it FMEG company, be it automobile companies, and luxury companies, whichever you want to call it as. So from that perspective, I guess I think the economic condition remains absolutely convincing. Now, the challenge and I think the important part is that in the
Right.
given situation, whether we are meeting enough amount of challenges on the inflation front. Maybe I think not so far. I guess I think inflation is a bother for most of the economies of the world. India has been reasonably better in managing it, but still I think that is a challenge that continues. But on the other side, the global environment, most of the global
Right.
investors, including global businessmen, they have started looking India at a very, very favorable destination from investment. In fact, I think last visit of Prime Minister to America has
Hmm.
actually created the FOMO effect in the minds of most of the global businessmen who
Right.
are basically looking at India from investment perspective. So I am seeing the market environment remaining absolutely buoyant because of
Okay.
I think the plenty of money coming into our economy from the global investment side as well.
Okay, Mr. Choksi, if you could also help us with your view of the earnings so far. You know, from the IT pack, we've had a flurry of earnings, the big four IT firms, the mid cap IT firms so far, the banking names that came out over the weekend, ICICI Bank, Kotak Bank, AU Small Finance Bank, Yes Bank, all of those as well, and Reliance Industries have already talked about. So, largely the set of earnings that have come off.
So banking, we are fully convinced because of the fact that if economy is traveling from 3.5 trillion to 10 to 12 trillion dollar in next 10, 12 years time, that means that banks will be contributing large enough into the growth of the economy. And one of the point I think which maybe I think I alluded saying that the big is getting bigger, and that is holding true for most of the banks. The larger the size of the balance sheet of the bank, the bigger they would be in coming period. In fact, likes of HDFC already started talking about doubling the size of the company in 4 years' time with 20% kind of a growth. So I would remain extremely comfortable with this kind of a situation where the balance sheets of the banks are clean and at the same time they are growing at a steady rate of growth. The bank unquestionably remains absolutely most convincing in the entire portfolio of investment. On the other side, ITs have definitely had their own challenges at the current level. So I fully believe that the IT's challenges are very, very short term in nature. I think the long term from the near term to long term for IT remains absolutely very convincing. On one side, the entire world is moving in the direction of cloud computing. Out of Fortune 500 company, only 30% of these companies are into cloud computing. So balance 350 companies are still yet to get into the computing in a significant manner. And that's where Indian IT company prospects remains absolutely buoyant and convincing to me. Maybe 1 or 2 quarters in which I think they might see some sluggish order intake that would probably would clear the path for the future growth. In my viewpoint, I think we remain convinced about IT. And any corrective price in the stocks, I think, would be a contra buy opportunity at current levels from investment perspective of at least 3 years or so.
Right. Devin bhai, let's get down to brass tracks. You've always been a big boy advisor on the stock side. You always prefer companies that have balance sheets and performance for about 30, 40 years. Tell us, our investors and viewers, the 2 or 3 stocks that you think make sense to add in the portfolio at current levels via a systematic investment plan of, buying in dips.
So maybe I think with a disclaimer that we have got the investment interest as an individual, family, even our portfolio clients and HNI clients position also would be there in the investment along with I think the clients who are operating on the brokerage and the depository side. With that disclaimer, I would probably come across few companies where I believe that I think the stocks looking interesting are companies like Tata Motors DVR. It looks I think absolutely very convincing to me. On one side,
Okay.
compared to the parent company's main stock, I think the stock is trading at a discount of 45%. So that is, I think, giving me sufficient amount of margin of safety for the downside kind of a protection that I want to look at. And most importantly, I think
Absolutely.
the commercial vehicle segment, passenger vehicle segment of Tata Motors, including the JLR portfolio of Tata Motors.
Yeah.
I guess I think each of these companies within Tata Motors remain, I think, absolutely on a right track with the cost reduction measures taken and with the growth in the demand supporting them. I feel that this particular company remains absolutely favorable. Along with that, an auto ancillary company in form of Minda that remains also equally interesting company from investment perspective. In each of the business vertical in which they are operating, I guess I think these verticals are supporting well to the entire growth program that the auto companies, OEM companies are following. So this company remains also equally interesting from the investment point of view. Then there are few companies I think which are basically still at a young age at this point of time, but one of them is in hospitality industry, and one of them probably I think which we are considering currently is in the area of defense and railway supply of critical components. We find I think such kind of companies interestingly positioned from the investment point of view. So yes, I think the names can be easily spelled out, but I guess I think the selective businesses are remaining opportunity from investment perspective for investors.
Okay, Mr. Choksi, in this kind of a
Devin
market.
bhai, I'm sorry I missed the names of calls. One second, Sakshi. Apart from Tata Motors DVR, would you please repeat the names of stocks that you've mentioned so that at least we can show the stock price graphics?
It is Minda.
Hero
You
Honda,
know
okay.
Minda. You know Minda. Yeah.
And apart from Hero Honda,
Not Hero Honda. You know
acha,
Minda.
you know Minda. Okay, okay, perfect. So, you know Minda. Okay, okay, perfect, sir. Just one second, sir. It's the 570 rupee price that you're talking about. So,
Right.
Tata Motors DVR because of margin of safety, and of course the fantastic rally that we are seeing in auto ancillaries. Devin Bhai prefers Uno Minda. Devin Bhai, please stay on with us. The markets have opened on a pre-open side, and let us see what they bring. At the moment, the Nifty is showing an uptick of 43 points. Let me show you what the prices are which are ticking on my screen. One second, please. Okay, let's look at Nifty 50, and we are interested in ICICI Bank and Kotak Bank. Okay, 2%. Ladies and gentlemen, we have a record high, and ICICI Bank now firmly in 4 digits, 1018. Wonderful start that we are seeing. Kotak Mahindra Bank a percent higher, close to the 2000 level, 1990 that I see on the screen. I'm very keen to find out what Reliance is doing. Let's see what Reliance is acting as. 1.1% lower at 2508. It's reacting to its earnings that were declared post Friday close at about 6 p.m. And I want to see what Infosys is doing so that we have an idea about how the heavyweights are panning out. Infosys is trading a percent higher at 1345. So these are what the heaviest weighted counters are doing. Let's move to FNO and see what are the most active counters doing here. DLF up 4% at 522. We let it settle. Hero Motors down to up 2.5%, 3186. ICICI we've discussed. L&T, this is the buyback boy. It announced a buyback last week. Again 2% higher, fresh record high, 2637. Ashok Leyland, fresh record high, 1.7% higher, 185. I want to see what SBI is doing. Let's go to the PSU banking basket and see what SBI is up to. 0.5% higher, 618. Let's go to the broader markets. Nifty is now reclaiming 19,800, 40 points higher in the pre-open. And let's look at stocks that are showing a green tick on the broader market. Credit Axis Grameen, 5% higher, 1377. SGVN record high, 5% higher, 5245. We've talked about DLF. Let's look at lower priced counters. RVNL 140, 2.5% higher. Let's look at UCO, Central Bank, all in the green. Bank of Maharashtra, all in the green. IRFC, 1.5% higher, 3550. Devin bhai, a very nice opening considering the fact that both Infosys and Reliance Industries were giving negative cues. So far, Nifty still up 30 points, 19,777. Sakshi, what are you watching?
So a whole host of stocks right there. Let's talk about Vedanta first. Of course, the earnings disappointed, and after that, brokerage houses also downgraded the company to sell with a target price of 225. So let's look at how Vedanta is trading at. Hindustan Zinc should also be in focus in the interim as well. Those are the two counters that I'm watching out right now. So Vedanta is down by a percent, 275. So you're seeing that reaction. Let's also look at Paytm. Of course, in the earnings, we did see the EBITDA loss widening on a sequential basis. That's something, but definitely there's a uptake half odd percent, 847 odd crore rupees coming in on that front. Let's also look at IGL. That also reported earnings, and after that, brokerage houses are positive on the stock. CLSA is given a buy rating of 600 targets, so that is getting priced in again, 0.3% uptick, 495 rupees currently for IGL as a counter as well. Share.
Okay, time to take a technical view in the market, and joining us today is Mr. Rahul Sharma. He's the Associate Director, Head Technical and Derivative Research at JM Financial Services. Rahul bhai, welcome to the show, and it's a gathering of friends. Good to see you again. It's a Monday. We are 4 days away from the monthly expiry. Tell us your views on Nifty first, and then we'll discuss Bank Nifty. Welcome once again to BTTV.
Yeah, very good morning, Shailendra. It's a pleasure interacting with you on a new platform, new channel, and the English language. Coming to how the markets are placed, finally, retail has started throwing in the towel. We're seeing retail cutting their short positions on the index futures. Finally, Nifty, seeing a pullback happening after what happened with the Infosys results, and today possibly the Reliance results could be a dampener. The reaction to the results could be a dampener. So my sense is, this could be a good opportunity where finally we see a pullback in the Nifty. 19,600 and 19,450. These are the two levels to keep an eye on if you're looking for fresh re-entry into the markets. Once these levels happen, I think there's a good chance that we see finally Nifty taking the 20,000 mark decisively before the monthly expiry. So I think the next 4 days could be highly action-packed. We have key results coming in from the index components. What is noteworthy is Bank Nifty and Fin Nifty have closed very strongly on the weekly basis, which means these are the areas of the market where we could see upside continue, whereas Nifty could take a bit of a breather. So net-net, the outlook is positive. Buy on dips should be the strategy.
Okay, Rahul, in terms of the big
Wonderful,
banking
Rahul.
names. Rahul, in terms of the big banking
Continue,
names,
Sakshi.
wanted to ask you, between ICICI Bank, Kotak Mahindra Bank, which is the one that you're finding more positive on the technical charts?
Yeah, so as far as private banks is concerned, the leadership is taken by ICICI Bank once again, and this stock I think should see itself testing 1,040,000 on the upside. We saw a good momentum happening in the last week. I think what is noteworthy, or what is relatively a better trade, could be Axis Bank. Now this has been consolidating around the 990, 960 mark. I think once 990 is taken out, there could be a fresh round of up move, which could take Axis Bank towards 1,050 as well. So I would rather go with Axis Bank at these levels. The risk reward are very favorable. Have a stop loss placed at 945, and I think a good 5 to 6% up move can happen in Axis Bank as well. So ICICI is the leader, no doubt about it. I think from a trade perspective, Axis is the one to go for.
Wonderful. So that's the view coming in on the big boys of banking. Rahul, any other two stocks or charts that you find are attractive at these levels, which our viewers, investors, and traders can look at?
Yeah, so there is clearly a bargain buy that can be had in some of the PSU names. For example, Coal India is one stock which has been which has taken support around the 100-day EMA around 229. This reward is very favorable for Coal India. Could see itself testing 240, 250 on the upside. Now, as far as momentum is concerned, on Friday's session, a clear cash-based buying was seen in Larsen and Toubro. The results are to be expected tomorrow. Before a result, I think there could be another flare-up in Larsen and Toubro. So from a trading perspective, if you're a high momentum chaser, I think Larsen and Toubro is the one to go for. If you're looking something on the defensive side, Coal India could be the one that could flare up in the next few trading sessions. So these are two ideas, one on the
Okay.
momentum side and the other one on the reversal side.
Okay, got that. Let's me also welcome my colleague Pawan Nahar, who is joining right in to talk about the expectations that we can have from the earnings today, especially Tata Steel right there, slated to report earnings today. Pawan, what are you watching out for? What are the big expectations there?
Good morning, Sakshi. Good morning, Shell. So Tata Steel is likely to report a negative bottom line in the first quarter of, ongoing fiscal year as domestic realizations are likely to be on flat and EBITDA per ton in India is likely to see a hit. And Europe's business will continue to, report operational losses. The performance will be impacted by higher input costs, soften, domestic prices and muted realizations. So EBITDA margins may fall in the single digits, and higher coking coal prices would compress the margins for Tata Steel. So talking about the numbers, so Tata Steel is likely to report a double-digit fall in percentage points in revenues, which is expected in the range of 56,000 crores to 60,000 crores, and EBITDA is likely to crash sharply about 70% on a year-on-year basis to 4,700 crores to 5,100 crores. And the company is likely to report a loss, which is expected in the range of 950 crores to 1,300 crores. Over to you, Sakshi.
All right, thanks a lot for that, Pawan. Rahul, your take on Tata Steel. How do you see that on charts, and what would be your call there?
Yeah, so metal index has seen a good bit of resurrection, especially after the long consolidation that it was into. Now, Tata Steel, clearly the sector leader, is forming a rounding bottom on the daily charts, of the targets of which take us to anywhere around 125 in the very short term and around 140 in the next maybe a month or so. So, my sense is metals should continue to do well considering the way the technical setup is. I would go long on Tata Steel at these levels. Have a stop loss placed at 111 as per spot, and there's a good 10 to 15% upside that can be had like in the very short term. So Tata Steel, along with the other metal packs, should do well in the coming days.
Okay, Sakshi, just let's do a roundup on the pre-open trade and then again get back to Rahul's picks. Nifty's ended flat in pre-open, 19,750. Okay, which are the stocks that show a disturbing trend? Reliance, down 2.5%, reacting to its earnings post-market close Friday, 2481. Kotak, surprisingly, shows signs of profit booking, down 1%, 1950. I want to see what ICICI Bank is doing. Right up there, up a percent, 1004. L&T right up there, 2% up, 2637. Infosys up 0.7%, 1341. That's interesting. What is the big boy doing? HDFC Bank flat 1678. Axis Bank flat 973. So this is how the pre-open trade is positioned. Let's get back to Mr. Rahul Sharma and his wonderful stock picks. You've pointed out two, Rahul. L&T record high, obviously, and Coal India, that looks good to you on the charts on the large cap space. Rahul, anything that catches your fancy in the PSU banking space, which is not State Bank of India?
So I think Bank of Baroda is one stock which hasn't really taken off. We've seen Canara Bank do well. We've seen SBI do extremely well. Even the likes of PNB has moved, but Bank of Baroda is one stock which is still hovering around its 200 level, and we feel that there is a breakout it's in Bank of Baroda. Now, what has happened in the stock is it's still trading around its 20-day moving average. The multiple stocks for the stock are placed at 195, 190 zone. So we feel that this could be a good area where the stock should see demand emerging, and the breakout should happen once we cross the previous week's high of around 2.202.5. Now, the projected targets for this setup are close to around 215 to 220, which means a 10% upside is possible. And this is the only PSU bank which has not really flared up along with the other banks. So I would place my bets on Bank of Baroda for a breakout, which is very much possible in this week.
Okay. Rahul, your take on Yes Bank.
Wonderful.
I wanted to take because, of course, weak earnings coming in there, but the stock has been showing momentum, and a lot of investors do this trading, on an intraday basis also on Yes Bank. Your thoughts here?
Yeah, so this is one stock where retail loves to trade because of the lower prices, and what has happened is at least the health of the stock technically has improved significantly over the last 10 to 15 trading sessions. Now, all the moving averages are in place. The stock has, in today's pre-opening, given a breakout above the 18 mark, and essentially this takes us to a trajectory where the stock could see itself testing around 20 to 21 on the upside. So, a good 10% upside can be possible in Yes Bank. I think, longs can be initiated with the stop loss placed at 17 and a half, and 20 and 21 are to be the two targets on the upside.
Okay, ladies and gentlemen, we have the first ticks on the markets. Nifty's opened down in line with what the Gift Nifty is saying, down 15 at 19,730. Bank Nifty is down to about 27 points, 46,050. Let's look at what the stocks are doing. Earnings boy, ICICI Bank, flat 1,000. Reliance, earnings down 2%, 2489. Remember, this is pulling down the Nifty. What is Infosys doing? Up 0.7%, 1341. That's what these three big boys are doing. What is Kotak Bank doing? Profit booking 2% lower, 1925. This is what we see in initial trades. Let's widen the hemisphere. Let's look at what HDFC Bank is doing. Flat at 1678. Axis is up 2% at 973. Nifty 17 points down, 19724. Let's look at the broader FNO space apart from the blue chips. Stocks that are showing signs of good traction. Fresh record high Canfin Homes, earnings doing a great deal, up 2%, 854. Record high on Ashok Leyland, 1.46% higher, 184. L&T powering ahead, 1.4% higher, record high, 2621. Bank of Baroda, something that Rahul just pointed out, 0.7% higher, 198. This is what the FNO is doing on the long side. Let's look at stocks that are reacting negatively. Apart from Kotak, we have AU Bank down 3%, 739. McDowell down 1.5%, 1023. Vedant, earnings boy, 1.9% lower, 273. Let's look at the broader NSE 500. Amongst the top gainers, you have SJVN down 8%, up 8%, 5450. RVNL ticking along merrily, 6% higher, 145. Triveni, it's the sugar pack that's rising, 4% higher, 316. Masdog, fresh record high, 276, 1916. And of course, Renuka Sugars, 2% higher, 4780. Sakshi, what are you looking at? Nifty
Railway
down
stocks.
23, 19722.
Railway stocks, Shell, you were mentioning, and we have RVNL, Titagar Wagons, both the higher in trade. Titagar Rail also all up in trade right now. We're looking at stocks like, Utkarsh Small Finance. Let's look at that. We will also be joined by the management quite shortly. Up again, on the second trading day, up by about 10 odd percent right there. RT Drugs is up in trade as well. A very sharp move on that one as well. Apart from this, you're also looking at stocks. Again, from the IT pack, apart from Infosys, you mentioned HCL Technologies, Wipro, all of them are up in trade again. So, recovery happening on the IT pack. Apart from this, let's look at L&T, Ultratech Cement from the capital goods and cement basket. Both of them are higher in trade. Again, from the power pack, NTPC is higher in trade as well. So L&T is up by 1% at 26.14. You can look at that stock. NTPC half odd percent higher, 195 coming in. ITC from the FMCG pack, again another half odd percent inching higher on the screen as well. So ITC is up at 494. Those are the stocks that I'm watching at. Tata Motors, let's look at that. Devin Choksi just mentioned his top pick as well. On Tata Motors, and that stock is now moving in trade. On Tata Motors, Hero MotoCorp also from the auto pack. These are the two stocks that are inching higher in the opening trade. Half odd percent higher for Tata Motors at 628. Hero MotoCorp, let's look at that one as well. At 3105, just flat to positive bias. You know, Minda, that was another stock that he mentioned. Let's look at that one as well, in case that has shown any momentum as well. Shell, what are you watching?
Okay, let's look at the broader markets. Nifty is now down 30 points, 19,714. Bank Nifty flat, 46,070. Apart from these, the top gaining index is the Nifty PSU Banking Index, as I had mentioned in the pre-open trades, up 0.8%, 4,600. We have the small cap index up in the green, 0.6% higher, 11,605. The IT index is up, that's very good, 0.2% higher, 29,951. On the losing side, metals and FMCG. These two we have already discussed. The broader market advance and decline ratio is favoring bears for the moment. About 1,100 stocks in the green, in the red versus 774. Let's get immediately back to Rahul. Rahul, your views firstly on the pre-open that we are seeing, especially Nifty Bank, and anything that's caught your fancy in the early part of trade.
Yeah, so I think we've had an opening which was very much indicated by the GIFT Nifty, and considering the way we closed on Friday around the support level of 19,750, at least the Nifty has started on a soft note. A further downside can be expected if 19,700 gets broken on the spot. So as of now, it is in a no trade zone. But what is looking good at these levels is Bajaj Finance. Now we saw good buying happening in Bajaj Finance in the last week. Now, clearly the stock has taken support at its 20-day moving average and has been slowly but gradually making higher lows. I think a move up till 8,000 is very much on the cards in Bajaj Finance. So if you're a positional trader with around 5 to 10 days kind of a time frame, I think Bajaj Finance is the one to go for. I have a stop loss placed at 74.90. And I feel that along with the Fin Nifty, this stock should see positive traction coming in the coming few days. So risk reward looks good, and headroom especially is pretty decent on the upside. And the risk reward is also very much favorable for longs.
Okay. PSU banks, all of them are up in trade, 0.8% move on the index today. So it's the PSU banks, like you had pointed out initially today, Shell, in our before the pre-open hit. So PSU banks definitely in the focus today. Central Bank, UCO Bank, Bank of Maharashtra, Bank of India, all up by 1.5% each. PNB, SBI, Union Bank as well. Rahul, which is the PSU bank that you would be betting on for today?
Yeah, so we've seen a good traction happening on Bank of Baroda. We've discussed that. I think one small PSU bank which has done very well, and I think the momentum is still not dried up, is Union Bank of India. Now, clearly the stock saw some consolidation happening at 80. We saw the stock heading towards 90. I think there is a good chance that this momentum takes us towards three-digit numbers. So I think from a breakout perspective, from a momentum perspective, Union Bank of India is the one to go for. Immediate target is 96. Above that, 100 is also possible. One can initiate longs with a stop loss placed at 87.
Okay. Railway stocks running away, Rahul, what would you prefer, RVNL, IRFC, or anything else that catches your fancy?
Yeah, so RailTel is one stock that we have been recommending to our clients, still continue to do so. Technically, the stock has literally taken off the entire price history that the stock has had in the markets. 160 roundabout is a fresh breakout in the stock. It could very well see heading towards the 190 mark. All the momentum, railway stocks are into good momentum. I think RailTel is the one to go for. One can have a stop loss placed at the previous stop of 149. This stop was formed in November 22. This should now act as a good support and go long on this one. So 190 is where we see the stock heading to. So another 15% upside can be had in RailTel.
Okay. From the auto pack, how are you looking at Ashok
another
Leyland,
sector that's buzzing, Rahul?
Yeah, so auto, I think I would take a leeway and pick a stock which is very good, attractive at these levels. I'm talking about Mahindra and Mahindra. You've seen Tata Motors do well. We've seen the entire auto pack having the time of its life. M&M is one of those stocks. Last 10-12 trading sessions, it has been subdued. The stock has come very close to its support level of around 1500. My sense is have a stop loss placed at 1455, slightly deep stop loss, but the upside potential is around 1650, 1700. So a 10% up move can be had in Mahindra as well from a positional perspective. The entire auto pack just refuses to go down, and we feel that M&M could see another round of rally happening from these levels.
Okay, auto, of course, going on top gear. Rahul, I'd like to draw your attention to the NBFC space. Canfin Homes first, followed by PNB Housing. PNB Housing will declare its earnings tomorrow. So that's the stock to watch. Both of them record highs. Your view on Canfin Homes and then PNB Housing?
Yeah, so Canfin Home, in fact, the stock has entered into a blue sky territory. We've seen a phenomenal move from around 550 odd levels without real correction as such. The entire pack is doing extremely well. So the best thing to do is have trailing stop losses and enjoy the ride till it lasts. Speaking of levels, I think psychologically around 900, we could see a bit of profit booking coming in. So one can have a stop loss placed at maybe at 840 and ride this momentum. Once 900 crosses, I think we could see momentum continue further up as well. So PNB Housing Finance on a relative basis has sort of not done as well as something like a Canfin Home, but here also the previous stock, which was around 750 odd, could be very much on the cards going ahead in the next month or so. So structurally, this is also a very strong bullish uptrend. The stock has continually taken support around its 50-day moving average since April, and my sense is this is also one of those setups where just have your trailing stop losses in place and ride the uptrend. Now, the immediate top that it had formed was around the 620 mark, which should now act as a good support. So have a stop loss placed at 620. The immediate target would be 700. Once 700 gets taken out, there is a good chance that we head towards the 750 mark as well. So both the stocks are doing well. Have trailing stop losses in place and ride the trend.
Okay. Rahul, what about the defense stocks? Do you watch this space? Mazagon Dock is again at a 52-week high today, 1938 on that stock. Sharp move of 3.8% today as well. Apart from this, stocks like HAL, Premier Explosives, BEL, all of them are up in trade as well. Which is the most promising stock of the defense pack that you believe?
Yeah, so Mazgaon Dock, I'll give it a skip because the stock has already done very well. Risk rewards aren't really favorable for fresh longs over here. But what looks good at these levels is Hindustan Aeronautics, HAL. The stock has been consolidating since June, and we saw a top being formed around the 3900 mark. The stock has been forming an ascending triangle pattern, which clearly brings us into the projection of at least around a move of 242 to 4300. So I would go long in HAL at these levels. Risk rewards are very favorable. The structure is very promising. Have a stop loss placed at 3800, and I feel that a good 300-point up move can be had from these levels. So HAL is the one to go for. A fresh breakout is very much on the cards in Hindustan Aeronautics.
Wonderful. These are the stocks that we are looking at in terms of buying even at record levels. Rahul, we fail to appreciate how the cement space is moving. Any particular stock that you'd like there, and then we'll come to pharma. ACC up 1.6%. So far at 1794. Ambuja Cement up 0.5%, 419.20. Your top pick in the cement space?
Yeah, so cement has been subdued since many days now, and primarily because the sector leader Ultratech Cement has taken a backseat. There were a few downgrades recently, post which the stock has taken second row. But my sense is most of the negatives are factored in, and at these levels in Ultratech Cement, I think the risk reward has again become favorable for fresh longs. 7950 is a very strong base for the stock, and one can go longs at these levels. It may not be a momentum buy, may not be a stock where we see immediate momentum, but I think right now the stock is into an accumulation zone. So maybe around 8150, 8050, 100 point range, you can look to accumulate longs. And once the stock takes out the 8350 mark, I think the stock will then see itself changing gears. So cement as of now looks to be a good buy for sure, but more of an accumulation zone. And once the momentum sets in, one can look to add long positions upon a breach of these resistance levels.
Okay. The small cap index is taking
Okay,
the
it's
lead again
exactly
today.
9:30 now. Let's take a view on Let's take a view on the Nifty. 15 minutes of trade is what we've seen. Now down 24 at 19,720. Which are the stocks that are pulling down the index? Reliance, of course, now down 2.5%, 2476. It's now at a multi-month low, showing a negative tick on a year-to-date basis. Kotak, despite fantastic earnings, is down 2.5% at 1980. These are profit booking moves. Bajaj Finserv down half a point. Let's look at stocks that are pulling the index up. It's ITC 1% higher, fresh record high 495. L&T a percent higher 2608. Axis half a percent higher 976. TCS and Infosys up 0.6% each in the green. Sakshi, what are you watching?
Tata Motors, stocks like HDFC Life are also pulling up the markets, half odd percent higher in trade. Cement pack you already talked about. Grasim is up in trade. Let's talk about, the IT pack is doing much better than expected. Wipro, HCL Tech, all of them up in trade right now. From the auto pack again, Bajaj Auto, Hero MotoCorp, the two-wheeler pack, they are doing very well today. Maruti also flat to positive right now, although. But from the banking space, of course, ICICI Bank is still holding up. From the consumption pack, Tata Consumer Products, that's the one that's also pulling up the markets higher. Rahul, anything that you spot right now in the markets, especially from the Nifty 50 pack, that one should definitely keep on radar today?
Yeah, I think if you are a bottom fisher, or if I may say, opportunistic trade can be had in Reliance. Now, Reliance is definitely reacting negatively to the news, to the result update. My sense is there is a big support coming in around the 2450 mark. So around 2450, maybe another percent down. We are trading at 2475 as we speak. There is a good, potential for the stocks to see a buying emerging into the same. So my sense is, you can look to bargain buy at around 2450, maybe have a stop loss placed at 2380, and there is a good chance that the market absorbs today's selling and sees a bit of a recovery from these levels. So look at this important level for any re-entry or fresh entry into the same, and we feel the mega trend of the stock is still up, and post today's reaction it should very well see itself back on track to its original trajectory, which is north.
Okay, a day before the Fin Nifty expiry for the month, we are seeing a very, very sharp traction coming into the NBFC space. Record high on CanFin Homes at the moment, screeching at 873. Power Finance Corporation is the second top gainer on the F&O space, 3.5% higher, fresh record high 235. RECL up 3%, again a government lending company to the power space, 167. That's what you see on the NBFC space. You have PEL, M&M Finance, HDFC Life in the green. Bajaj Finance is something that Rahul has pointed out, up in the green, 76.23. Very nice traction in terms of open interest, up 1.7% higher. That's what we are seeing in the markets. And of course, because of the problems between Russia and Ukraine on the Odessa port, the entire food chain across the world has seen an uptick on prices, whether it is sugar, whether it is wheat, whether it is rice. In our case, sugar is adding to the sweetness in the market. Balrampur, Chini, Triveni, anything which has sugar in it is showing a very sharp uptick. Monthly, weekly, daily highs in Balrampur Chini, Triveni Sugar, as also Renuka Sugar. Remember, these are the three top trading counters in terms of market sentiment when it comes to the sugar space. What else is ticking? Banks, and PSU banks. 12 out of 12 stocks in the Nifty PSU banking basket up in the green. Sakshi, she pointed out a very strong traction coming into the railway space. So RVNL, RailTel, all of them showing a very strong sign of still upward movement. Now let's try and get you a corporate feel to where the market is. In a while, we'll get Mr. Govind Singh, MD and CEO of Utkarsh Small Finance Bank, joining us. Till the time he joins us, let's again get back to Rahul and get a sense of his view on Rahul, the sugar space. Would you want to comment on Balrampur Chini, somewhere near its 200 DMA?
Yeah, so the entire sugar space is seeing good traction happening now. It began in Renuka. Triveni has given a breakout. Balrampur Chini is trying to come out of the rut that it has been. Now, clearly, the easier trade to see in this is Triveni. Clearly, a big breakout has happened in the same. Last time we came around the 310 mark was in December 22. 310 has been taken out in today's session, and the next possible resistance for the stock is placed at 340, 345. So a good 20-25 rupee upside can be had even from these levels. The stock is seeing a good expansion of volumes. Like today, we've just traded for around 15-20 minutes, and around 10 lakh shares have been traded. I think the way momentum is placed, the way volumes are placed, there is 4 upside to this. So around 345 is where one can expect the stock to head towards. So have a stop loss placed at 310, and a long is advised in Triveni HG.
Okay. All right, and now let's shift focus to our corporate interaction now. The company on our radar is the one that made debut on D Street on Friday, and a blockbuster debut at that. Shares of Utkarsh Small Finance Bank gained nearly 92% on day one, despite the turbulent market conditions. Second day running, and the stock is firing up. To discuss more on the company, the vision going forward, and what do we expect, with me is the top management of the firm. Govind Singh joins in. He's the MD and CEO at Utkarsh Small Finance Bank. Good morning, sir, and thank you so much for taking the time out for this discussion. Congratulations on the stellar listing as well. The investors would now want to understand from you more on what lies ahead after the listing as well. Fresh investors who have not got the allotment, they will also look at this opportunity from you to find out, how, what kind of gains can one really expect on the company's front. So let's talk about the loan portfolio. That is your core portfolio. We've seen a CAGR growth of about 30% in the last 5 years. What's the growth outlook there? Because a large portfolio of yours is an exposure to the microfinance space. So even though you have diversified the risk to an extent, what is your plan to grow the loan book going forward?
Okay, thank you very much for having me here, and thanks for your wishes also. So, in terms of our own loan book, we have grown around 28% CAGR for last 3 years. If you look at last year, it was 31%. And during COVID period also, we could grow around 26% during those 2 years. So what we have done during last 5-6 years after bank was launched in January 2017, we created multiple verticals which were other than microfinance. So microfinance is one thing we are doing for last 14 years, and we have been growing that and continue to grow that. So there is no doubt about that part. But at the same time, as a bank, we need to diversify our portfolio. So we have created MSME, affordable housing, wheels, and small corporate, other verticals. And now we're seeing a good growth in these verticals. Because of large size, you can say microfinance growth is little lower during last 2-3 years also. But the other verticals, those were created, those are giving, you can say always used or tailwind, or they are giving a good growth as far as the overall percentage is concerned. Our sense is that, the way we have done during last 2-3 years, this trajectory will continue because we have got strong teams heading these new verticals, and this trajectory of whatever you just mentioned should continue. I may not have any exact numbers in mind right now, but my sense is the trend and trajectory what we have seen during last 2-3 years that will continue from here also.
Welcome, Govindji, to BTTV. Let's do a nice stock check on your fantastic listing that's happening. Today, the stock is up 6% again. I'm sorry, 12.5% again. Up about 6 rupees at 54.95, and it's really early time on Monday, 9:38. You've already done a value of about 246 crores on the National Stock Exchange. So far up 12%, fantastic listing, and congratulations to all your shareholders. Sir, I just wanted to understand, typically microfinance is seen as a very high risk business within the banking lending space. What are your outlooks on the sectors that you are trying to lend into the next 2 or 3 quarters, and what will be the percentage of retail microfinance loans compared with the overall loan book?
So I want to just mention that our whatever microfinance we are talking of, say around 63-64%, this is entirely retail. All are 1 lakh rupee loans, and all are the group loans given to women entrepreneurs. So that is one thing about this part. Second, you mentioned about the way we have grown over a period of time. I think as I mentioned that it will certainly continue, and we have seen ups and downs as you mentioned. What we have done a little differently, maybe. One, we are sticking to our core geography. I think it's very important to understand the local environment, culture, the overall aspect when you talk of microfinance. So we have not deviated, or we have not gone to multiple geographies as far as microfinance is concerned. Largely, we are with the northern and central Hindi belt. Other than Odisha and small part of Maharashtra, we are entirely in Hindi belt only. So that we don't go to any other place where we don't understand the local markets. That is one part. Second, we do understand that during COVID period also, microfinance portfolio gets hit the hardest in such scenario. In normal course, this is one of the best asset classes I have ever seen. But when the tide is tough, in fact, sometimes it gets hard hit. What we have also done, if you see our last March 23 balance sheet, we have created a floating provision of 80 crore rupees, and our idea is that we will keep creating such provisions so that I'll use the word for rainy season when the things are really tough. This can be used. I just noteworthy that this money can be used only after we take approval from the Reserve Bank of India. So this is only for the critical situations when there are, you can say, natural calamities or those type of challenges. Only then this money can be used. So we have already started creating a buffer for microfinance portfolio, and that process will also continue.
Exactly. I was going to come to that because you did talk about natural calamities. Your regional constitution is around 60%. That comes exactly from Uttar Pradesh as well as Bihar. And, in the past, we have seen that the floods have, impacted your business in these regions. Given the current situation that we are looking at floods in North India, could that still impact your business in the given quarter?
So two important aspects. One is that this geography, which what you're talking of, this requires the most, in terms of CD ratio or in terms of overall credit offtake in UP and Bihar. Actually, UP is around 4% of the overall Indian credit, and Bihar is around 1% only. So this area requires much more in terms of credit. Having said so, flood and sometimes drought also certainly affects during monsoon season. So far, there's no impact at all this year. But in past also, whenever we have seen such calamities happen, especially in the eastern UP and Bihar belt of our geography, it's a matter of maybe 45 days to 60 days. It comes back very quickly. This does impact. This does get impacted for a short period. So far this year we have not seen any impact of flood, at least so far. And as I mentioned, it comes back very fast.
Mr. Singh, what would be your average borrowing cost, and what is the average lending interest rate that you charge, because the subtraction of these two decides your NIM?
So our cost of fund is in the range of 7%. If you look at the last year balance sheet, it's around 7%, and we are seeing a significant decline in our cost of borrowing during last 5-6 years. Because after becoming bank, we have put up a lot of branches. Liabilities is becoming much easier than what it was initial phase. Whereas our overall average lending will be in the range of 18 to 19%, because microfinance will earn little higher, and there are other asset classes where the returns are lower. But the range will be around 18 to 19% as far as overall yield part is concerned.
Okay. Also, sir, your outlook
wonderful,
on...
Mr. Singh, I'm sure.
I just wanted to ask one more thing,
Yeah,
Shel,
go
and
ahead,
then
Sakshi.
we can say. So, on outlook on your asset quality, and the slippages have been high as well. How do you plan to contain it? Secondly, the RBI has been in touch with you. They have raised certain regulatory concerns as well in the past with respect to compliance. So, what are you doing to ensure compliance going forward?
So first part is that we had seen slippages because of COVID scenario, and you must have seen the slippages from previous year. Last year was much lower. If you look at second half of the last year, slippage was much lower. So we are almost, I'll use the word, very near normal, and you can see yourself that our net NPA was 0.39%. So I think we have come out of COVID, and things look much better from here. It was COVID scenario which caused all these things. In terms of Reserve Bank of India, I think there are no regulatory concerns per se. There are always, we get guidance from RBI in terms of how we should look at our controls and those aspects, and that's a regular dialogue that happens with the Reserve Bank of India. So I mean, generally and overall, I think there are no concerns which have been raised by Reserve Bank of India, and we don't foresee any challenge from that side. And obviously, during last 5-6, we have also strengthened our compliance departments, multifold during this period also.
Okay, got that.
Mr. Singh, let's look at the broader sector where you are operational in, whether it's the banking space and the NBFC space. We are seeing one of the most wonderful phases for banking in the past maybe 2 decades. Group level NPAs are at record lows. We are seeing fantastic credit growth, very nice CASA ratios for banks such as yours. Paint for our investors and viewers a picture of how you see banking as a sector progressing over the next 3 years.
So in general, I think banking space looks very good, and COVID certainly impacted all of us. And what happens during this period, people, especially the control part, become much better. The business contingency plans, in fact, which were used by people during COVID period. I think no one thought that treasury can be operated from off location. Cyber security part became very strong during this period. People actually looked into each and every control aspect during this period. So my sense is the resilience of Indian banking sector is much stronger today, and the capital adequacy we see across. In fact, people have strengthened their capital part. So my sense is I may not be able to give an exact number in terms of what type of growth we are seeing, but the type Indian economy is growing, and the banks have made in terms of technology, in terms of controls part, they have become much stronger and strengthened themselves during last few years time. My sense is the growth, whatever we have seen during last few years, that will continue to grow from here.
Mr. Singh, what is your percentage of loans that you are getting electronically, which is via social media, via the kind of loans that you see which are sub 50,000 rupees? What is that percentage of the overall loan portfolio?
That's almost negligible, because as a bank, I think one is microfinance is you meet the client face to face, you train them, you teach them, and then you give loans. So there is a physical interaction with these people almost on a fortnightly basis. So there is no digital channels are used for payment, for disbursement. That's okay. But we does certainly meet the customer face to face. So all our channels, other than some partnerships where the amounts are very small, maybe negligible. These are less than 1% of our portfolio, where we are trying to have some relationship with some of the fintech partners. Otherwise, our channels are there. Unless we meet the customer physically, we don't disperse loans. So we still follow the conventional method as far as our own book is concerned. We are working on some of the digital channels, but it will take little, it will take some time.
All right. Sir, just one last question to you.
Mr. Singh, our final question to you.
Yeah. Please go ahead, Shel.
Yes, actually, go ahead. Okay. Mr. Singh, you've had a fantastic listing, and we've seen a very rapid price increase, up 12% even today. This is a very tough act to follow over the remaining phases of your listing life. What is the message that you would want to convey to shareholders?
So my simple message is that, I mean, when we are looking at the pricing and when we are doing our roadshows also, people knew that we have left adequate on table. When we are doing our listing, we knew that our price is very attractive. We're coming to market for the first time. We wanted a good experience of our new investors also. We had a lot of investors from the last 14 years, but new investors also we wanted a good experience, and that is what we kept on table. On our side, I think whatever performance we have shown during last few years, and that is one of the better one in the industry. I'll use the word best in the industry. I think we'll continue to perform better, and our focus on certain geographies and certain product lines will continue to be there. So the type of performance we have shown, I think we'll continue to show those type of performances going forward also.
Okay. Well, many thanks, Mr. Singh, for being with us and sharing all the insights about the company and the vision going forward and the message to shareholders. All the very best to you, and we shall hope for more interactions going forward as well. Let's get back to markets. Utkarsh Small Finance Bank still holding up about 10% higher in trade. The company bullish and positive about the business going forward as well. But Shell, let's get back to some of the stocks that we highlighted before, and those are still holding up. SJVN, for example, 9% of a move after the company signed a deal with REC. Triveni, RVNL, these railway stocks are definitely firing up. Aarti Drugs, for example, is 10.5% up in trade. These are the strong movers and the big movers with volumes as well in today's trade.
Yes, actually, the mood in the broader market is fairly good, and I illustrate it with a lovely example. If our PCR team can fire the intraday chart of Tejas Networks, remember this is a very, very high beta counter, of course, now trading somewhere close to its record highs. The dip in the stock was at a low of 780 rupees today. This was, it opened about 7-8% lower, and from that point of time, the buying has pushed the counter at 815. Sakshi, that's what I'm trying to sort of convey to our viewers, investors and traders, that it's a roaring bull market that we have. At the lowest point of the day, 780, Tejas Networks was down somewhere like 7%. The loss is just now 3.5%, and that's how we see very, very strong volume coming in. Let me tell you how much it's traded. About 100 crores worth of transactions on Tejas Network have been done. Apart from that, we are seeing strong traction in the sectors that you mentioned. Of course, railways is a very big play. Canfin Homes, record high 877. Bank of Baroda, which Rahul Sharma mentioned, 1.5% higher, 200 now. PNB ticking around merrily, 63.40. Again, we have BHEL up 1.3%. So these are all high beta counters across the space. Defense, as you mentioned, record high on Masdog, now kissing 1900. BEML, BEL, MTAR, all of them up in the green. And market's favorite darling these days is, of course, the railway space. RVNL, 5% higher, 143. IRCON, 1.7% higher at about, IRCON is at 94 rupees. Texrail, it's the day for wagon makers. Texrail and Titagar, 5% higher at 89 and 646 respectively. The PSU railway pack, RVNL, Railtel, IRFC and IRCON gaining anywhere between 1.5% to 5%. So the broader market sentiments are pretty good. Nifty and Bank Nifty down 25 and 54 points respectively. Like I said, it's a consolidating phase that we expect now after a stunning 5-7% rally on both indices in the month of July. We are approaching the monthly expiry, and the next 4 sessions are likely consolidating flat to weak. Sakshi.
Let's also look at the real estate stocks. All of them, most of them are up in trade. Lodha Developers, IB Real Estate, Prestige, Godrej Properties, some of them nearing their 52-week high levels again. DLF reported its numbers. It's also up by 0.5%. Oberoi Realty up 0.5% as well. So the real estate space is looking good in the morning trade. We're also looking at, apart from this, in the small cap basket, particularly the Nifty Small Cap 100, we're also looking at Triveni Engineering as a stock that's really moved sharply today, 5.5% higher. at 320, 321 odd levels, right? It's 3.2% right now up in trade, 318. That's another stock that is moving up. CAMS, that's another stock that you should watch out for, 2% higher in trade. Aegis Chemicals, 2.5% move on that one too. We've already mentioned Credit Axis Grameen and the finance space that is definitely inching higher today. Hudco is up by 2 odd percent in today's trade. Apart from the sugar pack that's mentioned by Shell, EID Perry, Renuka Sugars, all of them up in trade, Shell.
Absolutely. Let me just point out to you the real estate pack, as Sakshi mentioned it very well. When you look at the F&O space, you see very, very strong traction coming in the open interest side. If the PCR can fire Godrej Properties, it's just less than 45 minutes in trade. The open interest on Godrej Properties is 5% higher at about 30 lakhs 85,000. Delivery statistics are pretty good on Godrej Properties, and remember, this stock has a lot of margin of safety when it comes to the pricing. We've seen 2,500 on the stock sometime a couple of years ago, and it's now at 1644. So that's something that you can look at in the real estate spec. And of course, a day before the monthly expiry of FinNifty, it's the finance space that is doing phenomenally well. Just see Canfin Homes, 883, phenomenal earnings that have been declared, and in the first 45 minutes of trade, the open interest is 21% higher. It's phenomenal build-up of long positions here, record high on the stock, so that is something you can look at. And of course, Power Finance Corporation, 4% higher, 18% rise in open interest. And what's really interesting is that in Power Finance Corporation, Sakshi, the volume that you see on the counter in the first 45 minutes of trade has already exceeded the volume of all of Friday. This is a very, very bullish indicator. Obviously, the stock is trading at a record high, 237 for the moment. Sakshi.
Absolutely, Shell, a whole host of move coming in over there as well. And like you pointed out, open interest gainers, including, the finance names. We're also looking at the banking names. RBL Bank, for example, is in the open interest gainers list as well. Vedanta showing some open interest gains as well. Apart from Canfin and PFC, Reliance Industries also showing some open interest gains at this point in time. So definitely a whole host of moves coming in on that one as well. But before we wrap up, let's look at Reliance Industries and see how is that stock looking at this point in time. Still down by 2.5%, and that's important because of the weightage that it carries in the markets. Second heaviest weightage in the Nifty index, 2488 currently. But it's the IT stocks that are back in action, and that is what may actually provide some kind of a support in today's trading, apart from the banking and the NBFC space that we've been discussing all through and through. Well, thank you so much, Shell, for being with us on this discussion. And that's as far as the opening action is concerned for all our viewers. We will continue to get back to markets and help you understand the big movers as well, and all the expert action, expert views as well, as far as what should your strategy be on the markets going forward from here. Do stay tuned on to Business Today TV to catch all the updates from the world of business and stock markets. Don't forget to subscribe to this channel and also continue to engage with us on our social media platforms as well. Until then, many thanks for tuning in. Small ticket stock I'm going to be discussing, since that has been in the on the move recently, and I'm talking about Suzlon. This is one stock which has been extremely volatile, a huge wealth destructor for a long time. Historically, very, very different kind of charts that we have seen. But in the last 6 months odd or so, 100% move on the stock. Of course, some of the investors who had been holding this for long, hoping for some price revisions, they are clearly happy right now. Are you tracking this stock at all? 19.6. How do you look at Suzlon?
Sakshi, a level of 16 rupees was a resistance for the stock. So basically, what had happened was,